But we need to understand how our markets will fare today after this massive cut that we saw yesterday. Our research team is joining in with the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Sudarshan, let me come across to you first up. Very important trading day. What is the market setup looking like today?
Morning, Sonal. That's true. So the texture of market has become weak, and it looks like we might have another day where market is expected to be under pressure. Let me first talk about global markets. The overnight cues are indicating a mixed trend ahead of wholesale inflation or say PPI data. US indices saw a mixed close where crude surged sharply after Ukraine struck refineries in Russia, and 10-year yield remains sticky around 4.2%. Shifting to our market, till Monday, what looked like a broader market concentrated fall has now extended even to large caps. On Wednesday, benchmark indices of Sensex and Nifty too saw a fall of nearly 2% each, with more than 40 Nifty stocks closing in the red. Talking about broader markets, all the sectoral indices on Wednesday saw a close in the red with a fall of as much as 7%, and in the last 3 days together, the fall is of up to 15%. The severity of pain in the market can be highlighted by a few headlines from the Wednesday session. First, mid-cap and small-cap index have turned negative for 2024. Second, investors have lost more than rupees 14 lakh crore just in one day. PSU companies alone have lost market cap of more than rupees 6 lakh crore, and 99% of mid-cap and small-cap stocks were in the red on Wednesday. 400 NSE stocks were at lower circuit, and 200 NSE stocks were at 52-week lows. Coming to institutional activities, the sell figure for FIs was nearly rupees 4,600 crore, while the buy figure for DIs was almost rupees 9,100 crore, but it has to be seen with the perspective of ITC block days. GIFT Nifty so far is indicating a start with cuts. Coming to the cues to watch, we have India February WPI at 12 p.m. CNBC TV18 poll is at 0.22% versus 0.27% in January. In the US data, we have initial jobless claims. Estimate is of 2.18 lakhs, and we have Feb PPI as estimate is of 0.3% month on month.
Okay, all right. So those are the cues for trade today. Thank you, Sudarshan, for that. Let me go across to Vamakshi. Vamakshi, what are the stocks in focus today?
Well, good morning, Sonal. Let me first start off with Tata Motors. This stock is on our radar because the company has signed an MOU with Tamil Nadu government to set up a vehicle manufacturing facility, and they're envisaging an investment of almost 9,000 crores over the next 5 years. South Indian Bank also on our radar. They have said that they will not be onboarding any new customers for their co-branded credit cards until the bank fully complies with RBI's master direction. Federal Bank also in focus on back of similar reasons. They have said that they have stopped issuance of new co-branded credit cards. They will rectify areas of deficiency and seek regulatory clearance prior to resumption of new issuance. Yes Bank will be another stock that we will be watching out for, and that is because a report is suggesting that the company is looking for new owners, is expected to sell nearly 51% stake, and this in turn will give exit to shareholders like LIC, SBI as well as others who had come on board as shareholders in 2020. India Hume Pipe, the JV with AMR India and Shoda Constructions, has received work orders worth almost 1,137 crores from the Telangana government. KEC International, also in focus on the back of some order wins, has received orders worth 2,257 crores. RIL also on our radar. The company has announced that they will be acquiring nearly 13% stake of Paramount entities in Viacom 18 for 4,286 crores, and as a result, on a fully diluted basis, RIL stake in the company is expected to rise to 70.5%. Apart from that, Sanofi India also on our radar. The company and Emcure Pharma has announced exclusive distribution partnership to broaden reach of Sanofi's cardiovascular brands. PC Jewelers, SBI has accepted company's one-time settlement proposal to settle the outstanding dues.
Okay, all right. Those are some stocks that will be in focus as well. And finally, Nigel is joining in with all the cues from the F&O space. Well, Nigel, what does the space have for us today?
Well, the FIs have turned cautious, Sonal. You know, besides all this leverage positions here in India, the reason that the headline index fell is because the FIs are looking very, very cautious. You know, yesterday they sold big time in the cash market, adjusted for their ITC deal. And even in the futures market, well, just take a look at that. They added close to around 11,000 short contracts, which takes the short positioning to around 44,000 contracts. You know, I like this. I like the FIs to short. It gives you some kind of a reason to expect a short covering bounce. If the index itself is lacking short positions, then you're wondering from where the short covering will come about. So the FI is adding some short positions. I wouldn't view it very, very negatively. There's another technical factor that I'll be looking at today. The PCR, I've been telling you all through the week, once it gets to around 0.65 odd, we normally see a bit of a bounce. Now, given that the GIFT Nifty is suggesting that we're likely to see a bit of a downtick, well, that PCR ratio could in all probability go to around, 0.6 approximately, 0.63 approximately. When that happens, technically, this technical parameter normally plays out. And the reason that the PCR has come down to such a extent is because the calls, 22,400, 22,300, between them, they added close to on 2 crore shares. That's the reason that the PCR has come down. So the bears are feeling very, very confident. Levels that I'm looking at, well, the 50 DMA comes in around 21,900, and that's from where we bounced yesterday. But the crucial support zone is up for you on the screen. And in terms of resistance, the 20 DMA, which was a support, now it becomes a bit of a resistance. Yesterday, the Nifty Bank, well, it ended pat in line at around the 20 DMA approximately. Well, I'll be looking at that range as well as the 50 DMA, which is important support zone for the Nifty Bank. The GIFT Nifty is suggesting a bit of a pull down. At some point of time, just for today's trading session, I'm expecting the markets to bounce from the day's low. So let's see how that goes. Back to you.
Okay, all right. Thank you so much, guys, for joining us and prepping us up for this trading day ahead.